I'm going to go briefly over the basics of how taxes work. And it all revolves around this one fundamental form. And it's Form 1040. 1040 is the name of the form that every working person in America has to fill out every year in order to do their taxes. If you are a natural person, aka a human, then you have to fill out one of these if you make enough income. Okay? And the income you have to make is like about 13,000. If you make more than that, you for sure have to file this tax return. So, the top of it has the form number and the name of the form plus the year it's for. All right? The first part of the form wants your name, your address, things like that, but also it wants your social security number. It's got to identify you. Remember, we talked all about identification as a big part in both the previous videos. Part of that reason is because we're going to be using someone's social security number, so we need to have that social security number accurate and correct. And the best way to do that is to have the actual card. Okay. Filing status. There are 5 filing status, and we'll talk more about this in the next video. The 5 filing statuses mostly revolve around your marital status. Okay, there's questions about digital assets and your standard deduction as far as blindness and age, and we'll talk more about that in the standard deduction video, which we'll get to on another day. And then it asks about your dependents. You know, you got any kids? They live with you? Your parents live with you? Who lives with you? You know, that type of stuff. We got to know all these things because dependents give you benefits. After we've gone through your personal information and your filing status dependents, we get to income. And here we're going to start listing your different types of incomes from the many ways you make money. There are tons and tons of ways people make money, and this is just the short list. There's an additional income from Schedule 1, which has even more different ways to make money, and in some of these, there's a bunch more different ways inside of that. Okay, so it obviously starts out with wages, which is the biggest one, most common one, and other types of things that are very related to wages, but not quite wages. And then we have interest and taxable interest, dividends that are qualified and ordinary, and then we have pensions and social security, capital gains, and so on. And then we finally get to our total income. So after our total income, we get to take out deductions, and we have a few different ways to take deductions, but the gist is deductions are going to reduce your income. Okay. Pretty much, the IRS has 2 rules to help you understand what is an income and what is a deduction. Right? Income, we obviously understand the word income is to make money, and so what all counts as incomes, the IRS has a handy rule. Everything is income unless we say it's not. And the deductions, which we use to deduct or reduce our taxable income, the IRS has another handy rule. Nothing is a deduction unless we say it is. Okay, so the IRS gets to dictate what you get to take out, essentially. Everything goes in, and we'll tell you what you get to take out. And that works from both the first and the second rule. Okay, all Americans, all people who file the tax return, when we file this tax return, we get a standard deduction. Okay. In general, they follow these rules. We'll talk more about standard deductions in another video, and we'll clarify these rules because there are some nuances to them and changes to them. But the general gist is this: if you're single, you get to get your first almost $14,000 of income tax-free. So if you only made $10,000 this year, you're probably not going to pay taxes unless you have something additional taxes wise. Okay, married filing jointly, you get to make almost 30,000, which if you notice, that's those two number. It's this number times 2, one for each of you. Head of household gets a special 20,000, and we'll talk about why that is in the next video. Okay, and after we've taken out any deductions we might have, standard or otherwise, we get to taxable income. Okay, once we have our taxable income, we apply our tax rates to it, and we get a amount of regular tax is what I like to call it. So we have our regular tax, and then we have any additional taxes. There are a bunch of different things that might cause us to have more taxes. Are you self-employed? Okay, you pay self-employment tax. Did you make over 250, I think, $1,000, then you have additional Medicare tax. Did you take money out of retirement too early? Okay, well, you have early distribution penalty, so on and so on. So there's all different types of additional taxes that may or may not apply, and so those come in there. So once we've added in any additional taxes, we have our total tax, and then we get to take out credits. Credits are very, very nice. They reduce your taxes dollar for dollar. So the most common tax credit is child and dependent tax credit, which is why it's got its own fancy little line right here. Pretty much every child under the age of 17 that you have gives you $2,000 of tax credit. Other dependents, such as maybe you have a child over the age of 17, or maybe you have your parents as your dependent because they live with you and you take care of them, they only give you 500. If they're child under 17 that's yours, then that's 2,000. But if it's not a qualifying child for you, it's only 500. Okay, there's lots of other credits for lots of other things, such as going to college, energy like energy credit where you're investing in solar or renewable energy stuff, and so on. Okay, once you've got all your taxes minus all your credits, then you get to apply any withholdings and payments you've paid in throughout the year. So in your paychecks, they take money out for taxes. Well, some of that money is for Social Security and Medicare, but some of that money is probably also going to be for your federal income tax. So whatever your W-2 says from box 2 will tell you how much actually got withdrawn for federal income tax. And so any money you've paid in, either from your wage or from a 1099, no matter what type of 1099, or if you've sent in money throughout the year, that also can count. Okay, so any payments you've made to reduce the amount of taxes you owe. And so what they do is you take your taxes minus any credits, minus your payments, and if you have a positive number, you still owe them some money. But if you have a negative number, that means you paid too much, you've given them too much money, so they need to send you some back. And so that's what this last section is all about, refund or the amount you owe. If you want it refunded, where do we want it to go to? Okay. At the end, it's not valid unless you just sign it. Okay. And so here you would sign it, and paid prepare use only. This section is if you have someone who you pay to prepare it for you. And so when I was a tax accountant, this is where my firm's name and my boss's name would be, and my boss would sign it before we gave it to the client. Okay, so this is the general gist of this form and kind of like how it goes through and the logic of it.